Hey everyone, this is Kirk here again with the Option Writer, and what I wanted to do tonight is go over the portfolio that we have set to expire this October and this Friday here for options for our members. And I usually don't go over this public portfolio here, but it's already very close to expiration anyway, and all of our positions are either expired or at this point closed. So I feel confident going over this. As a note, we did actually close out one of our trades early this week. And namely today, right at the end of the day, we closed out one of our call positions, considering that the market has run so fast, so quickly here. And so what I really wanted to do at the end of this video is go over why we closed out that trade, why we closed it out early. Now, we didn't close it out at a loss. Actually, the price that we had suggested is a price that's a net neutral on the trade, so you didn't make money or lose money. You just kind of had a trade out there. And actually, the fill price at the close of the day for these options is a little bit less. So most of the traders and most of the members that we have actually got better pricing for the exit and actually made just a little bit of money, not a ton of money on the trade. But I did want to go over that with you guys tonight. The first thing I'm going to start out with here is a look at the S&P, and of course the mantra of the market right now is just up, up, and away. Just every single day it seems like it's continuing higher. I'll look back and I guess reference back here this January to April period here that we've had. And while we haven't made it exactly the same distance, it's behaving exactly the same. No really good news that's in the market. It just continues to go higher. So just keep in mind, what happened at the end of April and May is that we can go right back down just as quickly. So, we could be looking at 1050 here by the end of November. And of course, it probably sounds crazy now, but I'm sure I'll do a video then, and we might be somewhere around that region. Just going over the trades that we had on for October, just to show you guys kind of a flavor of what we do have when we trade. We had these 95 puts, so again, we sold short just these single leg 95 puts, and this is the DIA. This is a really good trade considering the market ran away from us, so these options expired very, very quickly. Again, a really good trade for our portfolio. The second trade that we had is an IWM 45 put. Now, we entered these in the beginning of really August, or the midpoint of August, beginning of September here. So volatility was a little bit higher, and we were able to get really far from the market. And you can see how far we got. I mean, we got basically back down to the lows that we reached in July of 2009. So these had no chance of expiring or being in the money. Just a really good trade. And then our third position that we had for October is these 30 puts. And again, you can see the same thing as the IWM. These were single leg puts all the way down here to strike price of 30. And we entered these as one of our first positions. And you can see how far away we got from the market. There's no way that this would have gotten hit. Really, these are just easy money. Okay, so on to the last trade. This is our SPY 119 call. Now, this is actually the trade that we just closed out today at a net neutral gain or loss. So again, no gain, no loss on the trade as far as we're concerned, although some members have already emailed us and said they got out at a small profit. We're just taking it as a net neutral trade, so we got in and out at the same price, which is 15 cents, and I think they're trading at around 13 to 12 cents right now for each contract. So the reason that we got out of this trade is twofold, really. When we trade options, we always say to our members, the one thing that has to happen for the market to eliminate our position or create a loss is it has to move very fast in the direction of our trade and in a short period of time. And you can see that the market has done just that. And again, this is the SPY that we're looking at. But the market, since we really entered the trade here, back when it was trading around 109, has moved very fast in the direction of our trade in a short period of time. There's just no correction whatsoever. Now, even still, we probably could be safe enough to let this thing go out for the rest of the week, so another 3 days. It's still nearly 2 points away from 119 as far as it closed today, about 117. So we could actually leave this on and kind of risk it for the rest of the week. Our philosophy is, if it's starting to get really close and now it's at the end of expiration, it's better to just close out the trade and have a net neutral trade, so no gain, no loss. Again, some people had a small profit on this. If you can make a small profit and don't eliminate or create the opportunity for the market to just bust through this level here at expiration and create a just monstrous loss that we might have on our hands. So just another way that we try to eliminate risk for you all as members. we're definitely watching out for you. This was a very good trade, obviously. It's just the market did exactly what we didn't want it to do. And even still, when the market moved completely against this position, we still had three great trades, which I've already shown you about. It's still going to be a profitable month. This one just happens to be one of those trades that you just have to learn from, and next time we'll try to get a little bit further from the market going forward. So hope this has been educational for you all, and thank you.